You will see there, then you will not be able to concentrate. For that reason, before going into any write-up in any books, first of all, we need to understand common sense. What is common sense? What is share-based payments? Suppose I am purchasing a computer or a laptop. I am purchasing a computer or a laptop in Saraf Academy, in Saraf Gurukul Private Limited. I don't have money, neither cash, neither in the bank. I requested to the computer supplier, can I make you payment in the form of shares? I will be giving you Saraf Academy, Saraf Gurukul Private Limited shares. He said yes. Okay. How many shares? Suppose the computer value is 1,50,000. Computer value is 1,50,000. So I need to give him shares valued 1,50,000, because if I will pay in cash or in check from bank, I need to pay 1,50,000. So similarly, I need to pay him in the form of shares 1,50,000. Now, my company, Saraf Gurukul Private Limited, Saraf Academy brand name, there is no shares listed in the stock exchange. My shares are there with Prakash Saraf and Vidisha Saraf, nobody else. So there is no value in the market. But I gave him, say, 5,000 shares. I am hypothetically saying, I have given him 5,000 shares, he accepted. I have given him 5,000 shares, he accepted. That means against 1,50,000, I have given him Saraf Academy, Saraf Gurukul Private Limited, 5,000 shares, and he accepted. Okay? So when I will record this transaction, I am not discussing any journal entry, debit, credit and all that. Not required. Uske bagair, we will be able to understand much better. Because there are many who don't have good understanding of debit, credit. Chahiye hi nahi yaar. Not required. When the assets I got, that is computer, laptop, 1,50,000. So in the balance sheet, under non-current assets, property, plant and equipment, computer will be there now. For this reason, I was saying that make the format. In the last class, what I said, those who don't know the accounting properly, write the format 2-3 times, at least one time. But there are many in the class who don't know the accounting, but have not made the formats. That means you are not following me. I can't do anything. So in the balance sheet, today also when I discussed, in the assets, the first item is non-current asset. Under non-current asset, property, plant and equipment. Under property, plant and equipment, equipment means computer, laptop. So under property, plant and equipment, I will be recording 1,50,000 computer value. That means the balance sheet asset side will increase by 1,50,000. To tally the balance sheet as per accounting equation, the liability should also increase by 150. Otherwise, how the balance sheet will tally? For 1,50,000, I am giving 5,000 shares. This is a share issue. Just now we discussed anything which is related with the owners will be coming in the statement of changes in equity. The share capital of Saraf Academy, old balance, Prakash Saraf, Vidisha Saraf share. But now we are giving shares to a computer wala for computer purchase. So 5,000 shares we need to add in the share capital. But in Saraf Academy, whatever shares we have, the value of one share on the certificate is written 10 rupees. In Saraf Academy, the shares face value, par value is 10 rupees. The shares face value can be any amount. 1 rupee, 10 rupee, 100 rupees, 5 rupees, 2 rupees, anything. But in my company, the shares are of face value. Face value means on the face of the share certificate, it is written 10 rupees. So when I am giving shares to the computer wala, 5,000 shares. So 5,000 into 10, it is 50,000. So in a statement of changes in equity, share capital will increase by 50,000. Whatever the share capital already there in the Saraf Academy, it will increase by 50,000. But then balance sheet will not tally because assets gone up by 1,50,000 and liability, that is shareholders share capital, going up by 50,000. there will be a difference in the assets liability by 1 lakh. We are saying those shares are given at a premium more than the 10 rupees because the computer wala has accepted the shares of 5,000 shares for 1 lakh 50. That means per share value is actually 30. He has accepted that. That means we are getting against issue of shares not even 10 rupees. We are getting 30 rupees per share. Not in cash, in the form of computer. So whatever money I am getting extra in the form of computer, that also need to be recorded. And whenever, not only to this computer wala, anybody in the world, when the company is giving shares to anybody, more than the face value, more than the par value, more than 10 rupees, then in accounting language it is called a share premium, securities premium. Share premium, securities premium. The share premium, securities premium is also a part of shareholders' money. Is also a part of equity. Will also be coming under a statement of changes in equity. Share capital, share premium, retained earning, revaluation reserve, everything. So under share premium, I will be recording 1 lakh plus. By issuing 5,000 shares, we are getting 1,50,000 value computer. So that 1,50,000 should be increasing in the liability side. 5,000 into 10, 50,000 is the share capital, and 5,000 into 20, 1 lakh is the share premium. So in the statement of changes in equity, in share capital column 50,000 plus, in the share premium column 1 lakh plus. So share capital, share premium both goes up by 150. That will be coming in the balance sheet, and the balance sheet value will be what? Balance sheet assets liability will be tallied. Balance sheet tally ho jayega. Balance sheet will tally. Just now I have shown the format. Again I am going in the format. But going in the format every time in the class is very tricky. So if the students don't know the format and they are not preparing, practicing the format, then in that case सीमा MCS भी पास नहीं होने वाले अमित जी. अपने ये सोच रहे हैं अपने क्या पढ़े, मैं जो बोल रहा हूं वी आर नॉट स्टडिंग, तो रिजल्ट कैसे आएगा? So for that reason you need to be very logical in your approach. If you don't follow me, then how just after 2 classes you will miss the race. Presently you are thinking only 1 class. After 3-4 classes you think that so many classes are there. Sir is going very fast. मैं तो ऐसे ही जाऊंगा जैसे जा रहा हूं. बट शुरू में स्टार्ट करते हैं स्टूडेंट से, सर मैं और क्या पढ़ूं. 4 क्लास बाद बोलते हैं सर व्हाट कैन आई लीव, दिस इज वेरी लेंथी सर. अंडरस्टैंड? सो डोंट स्किप एनी क्लास. Study full, not for the exam, as I said in the last class, for your knowledge. Here the statement of changes in equity, the share capital, share premium, we are adding 50,000 and 1 lakh. So this is the total figure. The total figure will be coming in the balance sheet under liability, under equity. Under equity, it will be coming share capital 50,000 more, share premium 1 lakh more. Yeah. Here premium is not written because सारा item नहीं लिखा हुआ है. It depends upon question what are the items. And in the balance sheet asset side, in property, plant and equipment, it is 1,50,000 more. So balance sheet tally. No journal. कोई journal का काम नहीं है. No debit credit. Equality. The debit credit is making the equality concept. Assets more, liability more. Assets more, any other asset less. One liability more, any other liability less. तभी तो equality. Here assets more, liability more. Assets more, equity more. But equity changes will be recorded in a statement of changes in equity, not in PL account. When we are doing this, this is an example of share-based payment. But this type of question will never came in IFRS and SEMA MCS exam, because according to their standard, this is very, very low standard. This is not the standard of IFRS exam, not even an adjustment. But from this, we are getting the feeling of share-based payment. Because share-based payment means what? Payment to anybody in the form of shares. Payment to anybody on the basis of shares value. Share-based payment. Payment to anybody in the form of shares. Payment to anybody based on value of shares. That is called share-based payment. And this example are taught to bachas, 10 pass out. Basic IFRS to share-based payment. Payment to anybody based on shares value. Payment to anybody based on shares value. So payment to anybody based on shares value is one simple example is this. But here we are covering what? Payment to employees based on shares. Even that payment which I said to a supplier for computer purchase, that is also share-based payment. But that too there. But the basic coverage of this IFRS is share-based payment to employees. Now, if anybody in our class working in an organization at a very senior level and the company is listed in a stock exchange, then those companies to their senior employees, to a particular category of employees, to attract them, they don't just give the salary, remuneration, bonus, wo to dete hi hain. Other than that, they give them the shares. That shares, when given to the employee, they will not think as an employee. They will think as an owner. Because the shareholders are the owners of the company. To give them the feeling that they are not employee. They are the company owners. For that reason, we are giving them the shares. In my company, if I will give shares to my employees, my employee will not take. Why? They will not understand the value of that because they are not so educated. Educated matlab they are graduate. Somebody not in commerce. They are not mad. They may have better English language than me. But that language doesn't matter. English language, Hindi language class is not there. The question is that they don't understand the value of share. Because if I will say that, along with the salary, I will not give you bonus. I'm not saying वैसे. I will be giving you, if you work for 5 years in Saraf Academy, in Saraf Gurukul Private Limited, I will be giving you my company shares, 5,000 shares. They will say, क्या बोल रहे हैं sir? What the value of that shares? If you are in a company even having 1 share, you can control the company. Control matlab now I need to go into company law. Because all the decisions in a company taken by shareholder, you will say directors. The directors are appointed by shareholders. The directors are controlled by shareholders. Ultimately, shareholders are the owners. So if you have in a company even 1 share, then you have all the saying, all the rights in the business decision of the company. You will be called in the shareholders meeting. And whatever you will say, the company need to accept. The company need to analyze. The company need to give a money. Analyze that whether it is correct or not. They can't say that, you can't say. So अगर मेरे employee के पास 5,000 shares हो, then तो they will start controlling Prakash Saraf with Isa Saraf. Sir, you can't do this and that. Presently तो they don't have any control. But normally, in a private company not listed in a stock exchange, share-based payments are not happening. It's not that it is not allowed. It is allowed. But neither a private company giving shares to employees and neither any employee are getting shares from a private company not listed in a stock exchange. Normally this is famous in bigger companies where the shares are listed in a stock exchange. You understand, anybody in the class working in Reliance Industries. Reliance Industry, 1 share price in the market, 2,500 rupees. And the company is telling you that if you work in the company for 5 years, we will be giving you 100 shares of the company. 100 shares value, 100 into 2,500, 2,50,000. You will start dancing. Because then you can find the value in the market now. Then in that case, you can understand the worth of that shares. But in the Saraf Academy, since it is not listed, you are not understanding the worth. But Saraf Academy share value is not 10 rupees, man. If you add all the assets of Saraf Academy at the current market value, not saying share value, land, building, plant, machinery, computer, laptop, all you add in the current market value. and I will deduct all my liabilities other than shareholders liability. I will deduct all the liability other than shareholder liability. Then the difference aayega, that I will divide by number of shares. In Saraf Academy, it will be coming greater than 500. So per share value in Saraf Academy is 500. It's not 10 rupees, man. But the common man don't understand this. So for that reason, no point giving them the shares. Give them the bonus, incentive, cash, leave encashment, they are better. They don't understand the value of shares. But in the bigger company listed in the stock exchange, this is very common. To attract the educated employees, knowledgeable employees, to attract the employee that they don't leave the organization, they work for a longer period, we are offering them shares. But not free. They need to fulfill certain conditions. They need to work in the company for 2-3 years, can't leave. They need to take the turnover of the company to new level. They need to help in the profit making of the company, because to get something, you need to give something. To get something, you need to do something. So shares are given to the employees by fulfilling certain conditions. The condition can be anything. That the company will decide. And there is a contract between company and the employee, that if you fulfill these conditions, then you will be getting shares of the company. There are 2 ways the company are giving shares to employees. One is, company is telling them, after 3 years, when you work in the company for 3 years, whatever will be the value in the market, you need to pay 40% only. Suppose Reliance Industry is telling to their employees, if you work in the company for 3 years, you don't leave the organization, then whatever will be the price after 3 years, you need to pay 40% price. Suppose after 3 years, the price is 4,000. So you need to pay 4,000 into 40%, 1,600. So what will be the benefit to you? 4,000 minus 1,600, 2,400. 4,000 minus 1,600, 2,400. Whether you will be interested in buying the shares after 3 years? Definitely yes. By paying 1,600, you are getting 4,000, but you need to pay 1,600. And suppose after 3 years, to take the shares, you don't have 1,600. How you will buy? The company is saying, the company is ready to give you shares at 1,600, 4,000 rupees value share, but you don't have money. For that reason, it is called ESOP. Somebody was saying ESOP. Option is not a foundation. Option is an option. Employee are given an option to purchase shares of the company. If they work for 3 years in the company at 40% of the market price, you can't force the employee to take the shares. मेरा एक advice है, एक बार till the time I am not finishing my saying, don't say anything in the class. Because maybe I am to okay, I am reading, but you will be disturbing others. I will be asking, is there any doubt? I will be giving you time. उसके पहले शांति से सुनिए, जो उसमें मत आइए, रिक्वेस्ट है. बिकॉज मैं भी सारी बातें 2 मिनट में बोल सकता हूं. हाउ मेनी ऑफ यू विल बी एबल टू अंडरस्टैंड? I need to say 2 times, 3 times, Hindi, English, this, that, example. उस पर फोकस करिए. Maybe you know out of 190, some 10 is missing, you are for there. Somebody out of 100 know 10, 90 is missing, you are for that here. Somebody know 0, so 100 need to, I need to make everybody understood. So request है, हाथ जोड़कर कुछ मत लिखिए. I will be giving you time. I will not be going forward till the time your doubts are not cleared. But without explaining anything, how I will ask you that, did you understood? कोई मतलब नहीं है. Request. Understand, समझिए. क्लास में अगर मैं पढ़ा रहा हूं, forget about online class. I started teaching IFRS 2, share-based payments, and somebody started before that only doubt. तो समझ में नहीं. That person will be disturbing the entire class. It's not a question of online or offline physical class. Same story. Okay? आगे बढ़ते हैं. मैं आपको पूरा समय दूंगा. आज नहीं दूंगा, next दिन दूंगा. If the time is gone in explaining the concept, how can you ask your doubts? You need to digest it, understand it. Then only you can ask your doubts now. And if you know something, keep it with you. Don't take tension. Okay? Company is saying to employees, if you work for 3 years, this is just hypothetical example, then whatever will be the share price after 3 years, We will be giving you shares of the company at 40% price. There is no foundation on you. If you are interested, you can take shares at 40% price. For that reason, option. Employee Stock Option Policy Scheme. ESOP. We generally don't say scheme, ESOP. Employee Stock Option Policy. The company is giving option to employees to take the shares of the company at the time of when the conditions are fulfilled at less than the market price. But whether employee will take or not, no guarantee. Because they need to pay and they don't have money. How they will pay? How they will take the share? They will not take. Or maybe you have money, still you are not interested in taking. Why? You are thinking that company is giving at 40%. But later on the price will be even lower than 1600. Why? Because in the market when the employee is getting shares, they will not be able to sell in the market. There is a lock-in period by SEBI guidelines, by most of the company law in the world. Generally the lock-in period at least 2 years. So if you get the shares at 1600 and after 2 years when you can sell the shares in the market and the price will be less than 1600, then what is the gain to you? So you may be thinking that the price will be less than 1600 when you can sell, when you can get the money. You are not interested. So there are two reasons for option. One is no force. If you have money, you buy. If you don't have money, or still if you do money, but you are not interested in buying. जबरदस्ती नहीं है, force नहीं है. Option. Option. There is another kind of share-based payment. The company is telling to employee, if you work in the company for 3 years, then whatever will be the share price after 3 years, 30% of that we will be giving you cash. No shares. No money to be taken from employee. 30% of the price we will be giving in you cash. So after 3 years, if the price is going to be 4,000, we will be giving you 4,000 into 30%, 1,200 cash per share. How many shares? That the company will decide. Every employee will be getting cash for 100 shares. So suppose I am working in Reliance Industry, worked for 3 years, the price is 4,000, I will be getting 4,000 into 30%, 1,200 into 100, 1,20,000. Whether I am interested in taking cash, whether I will be interested in taking cash, now there is no option. I am not a Kalidas that I will say I will not take cash. So this is not called option. This is called stock appreciation rights. Whatever the appreciation will be there, you will be getting some part of that in cash. But that is also based on shares value. When both the things are based on the share value, so they are called share-based payments. Why the word is share-based payment? Because both are based on shares value. I said that one thing, the employee will be given shares at less than the market price. And the other thing, employee will not be given shares. Employee will be given cash based on the shares value. So when the employee will be given cash based on the shares value, not a single employee will say that I don't want. Not a single employee will refuse. Employee is not mad. But both the cases, the value in cash or the amount to be taken from them based on the shares value. For that reason, it is called share-based payment. When to anybody you are making payment based on shares value, either share or anything based on the share value, then it is called share-based payment. Getting? सुना ना? एक ही बात है, जब आप पढ़ रहे हैं, when you are taking the class, close your room, switch off your mobile phone, be in a place where nobody can disturb you. Because it's not Shahrukh Khan movie. It's a concept. And there are so many things I am discussing. So for that reason, you need to be 100% attentive. Everybody. Now, this is, you can say, background information relating to IFRS 2 share-based payment, background information. Maybe in any book, this information, this thing is written in a different language. This is my way of explaining the concept. The question arises here. When the company is saying to their employees this, that today is 26th of August, if you work in the company for 3 years, that is 26th August 2026, 23 to 24 1 year, 24 to 25 2 year, 25 to 26 3 year. If you work for 3 years till 26th August 2026, then after 3 years you will be getting either shares at reduced prices or you will be getting cash, anything. We are going to record this in 3 years. How? I'm not asking, I'm just saying that start thinking in your mind. Because with this transaction we need to record in the books. Books means, maybe somebody will say journal, ledger and all that. According to me, books means summary. Summary means PL account, balance sheet, cash flow, statement of changes in equity and all that. There. I'm not focusing on journal and all that. My way of teaching and study is purely everything. What will be in the balance sheet? What is in PL account? What is in state? That's that. For that reason I said in the previous class, prepare the format. अमित निगम जी बनाना है, नहीं बनाए आप, मेरे को मालूम है, समझ में नहीं आएगा. And then in that case we will not be able to pass management case study if we don't know the concept, because this is not common sense. Other than accounting part, whatever we will study in case study, that's a common sense. But this part, the accounting part, is not common sense. You need to practice, sir. Otherwise, we will not be able to write the answers in management case study exam. Maybe you are thinking, or anybody thinking, one class, just give me 2-3 classes, बात करते हैं फिर. Then you will say, how many classes, sir, how much you are teaching? मैं बोलते जा रहा हूं, ठीक है? Now, we need to account this, which we are going to do in 3 years in our books every year. We need to record this. When there will be a share issue, where it will come? We have discussed share issue will be coming under statement of changes in equity in share capital, share premium column. We said any type of share issue वहीं तो आएगा. But question is that from 26 August 2023 to 26 August 2024, we are not going to give them cash or shares, nothing. Because that too we will give them after 3 years when they will be there in the employment. So the question is that in this first year, 23 to 24, what we will record? I am not asking, don't say. I am just asking, start thinking. सोचने लगी. That we are discussing, and that is written in IFRS 2, share-based payments. We are saying that accounting need to be done on accrual basis. What is accrual basis? Suppose my year ending is today, but the current month, August, 26 days salary, I have not paid to my staff. But the salary will be recorded as an expense in PL account. Payment not done, but it is for the year, accrued this year. And it is not paid will be coming in the balance sheet as a liability also. Similarly, when I have already communicated the scheme to employee, that when you work for 3 years, after 3 years, I will be giving you shares at less than market price, or I will be giving you cash, the contract is signed, everything. That means the accrual concept arises. And according to accrual concept, I need to record the transaction in 23-24. How? What amount? Suppose presently in the organization, 500 employees are working and all are given this scheme. 500 employees. But what is the guarantee that all 500 will be there after 3 years? Nobody will leave. I will go in the past. How many employees are leaving every year? I will forecast in coming 3 years how many employees will be leaving. That may not be correct. But accounts need to be prepared based on estimation. If you charge a depreciation, you estimate what is going to be the life of the assets. 4 years. Who said that that is correct? Without estimation, accounting cannot be done. So I need to estimate out of 500, how many employees will be there after 3 years. I need to estimate what will be the value of share after 3 years. Based on that value, what is the cost for the company on each share? If it is going to be 4,000, I am going to give them 1,600 pay, 2,400 per share is the cost. If I am going to give them cash, per share 1,200, it need to be calculated, estimated. In accounting exam, you don't need to do any estimation. In the question, it will be given. This many employees are going to leave in 3 years. This is going to be the value after 3 years. Everything given. But in practical life, you will say, I have to not studied this. Nobody is hearing this. Accounts, finance, management, accounting, everything are correlated. But I am not in a position to discuss share valuations here. The present value, future value, cash flow, that's not possible. We are focusing on accounting. In exam, any exam, MCS, management case study, सीमा और IFRS और any exam, आपको value दिया रहेगा. Based on that value, you will calculate the expense for the company for 3 years. If I will say that out of 500 employees, in coming 3 years, 50 will leave. So they will not get anything. So 450 employee. And every employee, the expense each 2,400 on each share. Every employee will be given not one share. Every employee will be given some particular number of shares. Suppose every employee will be given 100 shares. So on each share, 2,400 will be the loss. 450 employee, per employee 100 shares. So the total expense, loss, whatever you say, for the company in 3 years, 450 into 100 into 2,400. 450 into 100 into 2,400. This is the expense for 3 years, not 1 year. 3 years. But I am talking only 23, 24. Only 23, 24 first year. So what is the first year expense? The total expense of 3 years divided by 3 into 1 will give you the expense for the first year. This is purely based on estimation. Number of employees, share value, but accounts, every single step estimation is there. Without estimation, accounts cannot be prepared. So estimation, accrual concept we need to follow. And whatever the expense we are estimating for 3 years, 1/3 we will be recording as an expense in the first year. Where? We will be recording the expense in PL account. Where? In PL account, it is revenue, cost of sale, admin, selling, then operating profit, then there is investment income and all that. Kaha? When the employees are working, in the manufacturing activity, then that employee expense will be under cost of sale. When they are working in admin activity, under administration expense. When they are working under selling activity, salesman, sales manager, then under distribution and selling. Because in PL account, there is no 50 items. The expenditures are 50 type, but there are broader headings. Cost of sale, admin, selling, bus. तो जैसा employee, उसका खर्चा वहीं लिखा जाएगा. So in the PL account, anywhere you will record expense. So the profit will reduce. The reduced profit will be coming in a statement of changes in equity in retained earning. So retained earning will reduce. So the liability side will reduce. In the balance sheet, under liability side, under equity retained earning less. So to tally the balance sheet, you need to either reduce the assets or you need to increase some other liability so that the balancing will be done. Now, these shares are given to whom? Employees, or maybe cash. Employees. This we are not giving now. We will be giving after further 2 years. अभी तो 1 year हुआ है. अभी तो just 1 year is over. Still 2 years are there. So that whatever you need to pay them after 2 years is still. It is shares. You are going to give them shares. Or if it is cash, that is you are going to give them based on the share value cash. 2 things are there. If you are going to give them shares, it is share capital, share premium, because that is also a part of a statement of changes in equity. If you are going to give me cash, giving cash, not shares, then cash to be given to anybody, not to the shareholder, to anybody, whether employee, whether supplier, anybody, then it is a liability, non-current, current. But the liability you need to pay after further 2 years. Anything payable within 1 year is a current liability. Anything payable beyond 1 year is a non-current liability. So you will be recording either this as a part of equity. If you are going to give them shares, if you are going to give them 4,000 ka shares at 1600, then that is equity. But if you are going to give them cash, then it will be coming as a non-current liability. Equity means this is treated other components of equity. Why? Because we have not given them shares now. We will be giving after further 2 years. Abhi ye share bana nahi hai. This is not shares. This will be becoming shares after 2 years further, when the 3 years will be totally over. So when you will be making a statement of changes in equity, then you will be making a column, other components of equity, ESOP, whatever you want to say. The language is yours. There is no fixed language. The better language, they use other components of equity, OCE. In the exam, you will be making a column OCE, and you will be writing the ESOP under OCE column. How much? 1/3. The total expense of 3 years, 1/3. That expense which you have recorded in PL account, you are recording under statement of changes in equity, OCE column. So in the balance sheet, the equity goes up because OCE is a part of equity. And in the balance sheet, the retained earning goes down because you have recorded expense, balancing done. But if it is not a shares you are going to give, you are going to give them cash, paisa dene wale. You are going to give them cash, then not here. Then it will be coming in the balance sheet under non-current liability. ESOP liability, when you are going to pay after still further 2 years. So greater than 1 year. If payable within 1 year, then current liability. Anything payable to any outsider other than shareholder. Non-current payable beyond 1 year. Current payable within 1 year. No journal, no ledger. Somebody is doing journal in their mind, you go on doing. I am not concerned with journal ledger. I am concerned with balancing. Assets equals to liability, or assets minus liability equals to equity. I need to make them balance. So if I am increasing a liability, I will reduce another liability, or I will increase assets. If I am increasing assets, I will reduce another asset, or I will increase liability. Then only the balancing will be done. So by recording the expense, I am reducing retained earnings. And by reducing OCE, I am increasing this equity part. So in this equity part, retained earning gone down, OCE gone up, barobar. Or if I am going to give them cash, I am recording under non-current ESOP. I am recording under non-current ESOP, which I need to pay them cash. So retained earning gone down, non-current gone up, barobar, equal. No journal ledger concept. There are so many accounting packages where no journal are done nowadays. You just put the figures, it will prepare PL account balance sheet automatically. So mean to say that based on accrual principle, we need to estimate what is going to be the number of employee, what is going to be the expense per share, what is going to be the number of shares we are going to give them, and we need to record on accrual basis every year the expense. So every year the retained earning will reduce, and every year the OCE, or I mean to say liability, will increase, because first year liability is only 1/3. Second year 1/3 more. So total liability will be 2/3. And second year expense also deducted from profit. So retained earning further gone down. And then after 3 years, when everything is over, we know exactly how many employees are there, how many of them are taking the shares, how much loss we are suffering. So we will be recording based on that only. The shares will be given to actual employees, those who are giving money. Cash will be given to actual employees, those who are there for 3 years, not to everybody. For this, maybe I have also written in the notes journal. Where the journal is written, I will explain. Don't worry. No concept of journal, pure single concept of accounting. My duty to explain you. आपको कोई टेंशन नहीं लेना है. You don't have to take tension. But the share-based payment is based on accrual principle. The share-based payment is based on accrual principle. And the share-based payment is based on value of shares of the company. Value of shares will be given in the question. Number of employee plus minus given in the question. You need to record for every year the expense and the liability or the OCE. And at the end, when everything is over, then when you are making them the actual payment, then you record the actual payment. Suppose you are giving them the shares. So other components of equity gone, share capital and share premium will increase. Because again the share value is 10 and you are giving them at 1600. They are giving you 1600. So 110 rupees is the share capital and 1590 is the share premium. Both will increase. And the other components of equity gone. It's gone. Usko nahi likhna hai. So now they become share capital, share premium. Or maybe if they are under non-current liability, you need to pay them cash. You pay them cash. So non-current liability gone and in the asset side cash gone. Both sides gone. If it is given in the form of shares, not cash, then to other components of equity gone, share capital, share premium up. If they are given cash, then the non-current liability gone, cash and bank balance gone. Whatever money you are giving them cash, both are reduced. We need to understand this with specific examples. How they will write the question, how they will be giving the detail of the employees. They are using some technical language. Then what is the meaning of those technical language? It is this only, whatever I said. In the technical language, when the questions will be coming, how I will be able to solve the question, that we need to practice. But a basic understanding I have developed. Basically what is share-based payments and share-based payment to employees. How we are going to account for. Mota moti. Not 100. For that reason I am not asking, do you have any doubt? You may have doubt, but you need to wait. Let me take some examples with the figures and all that exactly in a question. Understand that at length. 2-3 examples. Then you start asking your question. No problem. But without that you will not understand. आपको पहले थोड़ा सा और टाइम देना होगा. Can we take a break of around 10 minutes? Some urgent work. Around 10 minutes. So it is 15.06. We are again meeting at around 15.16. Okay? The class is running. Nothing is off. It's running. But just that 10 minutes we are taking break. Okay? Some urgent work is there for that reason. Okay? Because they are again and again calling me, disturbing me for that reason. Okay. So we are meeting after 10 minutes again. You can, whatever you want to do, you can do for 10 minutes again. We are meeting after 10 minutes. Okay.